How we doing, everyone? Today is Monday, July the 31st, 2023. Just going live here, about to start right about 8 o'clock. But what I'm going to be doing is taking any questions in regards to real estate notes and reviewing a potential deal, just so people can kind of get an idea of some of the stuff that is out there, some of the price ranges, and I'll be doing this periodically. So if you're interested in this particular deal, you can, definitely reach out and we could see about working together on it. And just trying, like I said, trying to go through the process on how we make decisions, getting people more comfortable with the due diligence process. There's one level of due diligence, and then there's a second level. The first level is kind of the surface. You look at it on the surface, and then if it looks interesting, you potentially make an offer on it. If the offer is accepted, then you kind of go to the second level of due diligence, which we'll talk about at another time. But just going through a series of note investing and taking everybody from the beginning of notes to the end on when you buy. So just trying to get people more comfortable with it. Reasons why you want to get yourself involved in notes potentially if you are interested in real estate. We did 5 different teachings or lessons or education on it. They're all at the YouTube channel, Abundance Capital Group. You can go there and see all 5 of them. Again, we're just taking it piece by piece. The videos are no longer than 30 minutes, and then we're going to go all the way through. And we do that every Saturday, 12:30 Eastern Standard Time, until we get to, the end where we've purchased it and what happens at the end when we purchase it. So we're going from A to Z on it each week. I don't know exactly how many weeks it may take. Right now we're at 5. It'll probably be somewhere maybe 10 to 15 different episodes. So you can always go to the YouTube channel, Abundant Capital Group, and see the trainings there. So today, like I said, we're going to go through a showing a deal. So I'm just going to pause this for 1 second and be right back. All right, so let me just share my screen here. So here we go. So, we've been going through this training and we've gotten up to the point where we started talking about due diligence. And what is due diligence? Due diligence is how we look at potentially, look at what is something potentially that we may, want to purchase. And we kind of went through the steps that we take to do that. We have the asset price, the property value, the numbers for the deal, property title, property taxes, proper documentation, and exit strategies. We go through each one of those, as we look at these potential deals. Now, when we do the surface level evaluating a deal, we may not get everything out of all of those things that I just named. We may not be able to obtain all of that information because we're just doing surface level. But if we get enough information, we could say, hey, this looks like something that we could potentially purchase or looks interesting. So we're going to kind of go through each of those steps and see what information, what's out there, what can we get our hands on from public information right now. And the reason why is because sometimes you can't get everything that you're looking for on the public, on the web or something like that, or on the county websites and things of that nature. Sometimes you're not able to get all that information. Sometimes you have small towns, you have less populated areas where these notes are, and their systems are not, high tech and really up to date. So you can't always get everything online, but a lot of the times you can. So we'll try to see what are the things that that we can get. So this is an actual note that is for sale. It is on a note trading platform. It's an note investment company that purchased a pool, or purchased a number of notes. And this one here, well, no, this site actually is for when note investors and people who buy notes, want to list their note for sale. They go to this particular website to offer it to the public. So that's the case here. So as you can see here, this is a first position lien. That's what we focusing on. It is performing. So the person that's in the property is paying on time, from what this is saying. And performing can be a little tricky because sometimes, there may have been an issue, or, they may have modified the loan and somebody had made one or two, three payments, something like that, and they'll call that performing. So you have to, kind of, when you go into that next level of due diligence, you want to kind of figure that out. Sometimes we can figure that out on the surface level, and sometimes we have to wait until we get additional information to do that. So the security agreement for this one is a contract for deed. That means that the person that's in the property or paying every month is not on the title. Contract for deed is kind of how it sounds. You get the deed once you fulfill the contract. Once you make all of the payments and it's paid off in full, you then get the deed to the property. So technically you have an ownership interest in the property, but you're not on the title as the owner. So the unpaid balance here is $9,961.79. It's saying that it's about 31% loan to value. So that would be, that percentage, that $9,900, $9,961.79 is 31% of the value of the property, which is very good. It's been paid down. Somebody's been making this payment for some time. Looks like here it was originated in 2017. So they look like they've been paying on it for the last 6 years. The total payoff, they don't have that information. Again, we'd have to, get that if we move forward, if we think that we want to move forward on that. The number of payments remaining is 105. You'll see the 0.57. It just kind of works out that way. Obviously, there's no 0.57 when it comes to months, but roughly you're going to collect this payment for the next 105 months. The interest rate on it, the when it was written, is 9%, which is pretty good. That's a pretty good interest rate. And the principal and interest payment on this is $136.93. So that's what the person's paying per month to live in this particular property. And they have, some escrow and other stuff on here. Their total payment is $187.73. So, as you may or may not have seen some of my other videos, there are notes that are in all price ranges. As you can see, over here, it's offered at $9,000. So basically, just below of what the unpaid balance is. Now, that doesn't mean that you have to pay that, but that's what they're offering this note at. And then over here, you see when the next payment is due, when the last payment was made. And again, because it's performing, it looks like the person is paying on time, and then has the maturity date. And a lot of times you want to look between the origination date, which is 2017, and the maturity date. So basically that's 15 years. So this was 180 months originally when it was written, and they've made about 75 of those payments, and they have 105 left. This is the address, 3027 Woodbine Street in Jackson, Mississippi. It's a 2-bedroom, 1-bath, just over 700, a little bit less than 800 square feet. And so what we do is, like, we see this, we think that, okay, we've got, about 10 grand that we want to invest. This is something that kind of fits into that. So we then say, okay, well, let's look into it. Let's just see if it's a good deal. And so we take those list of things that I originally talked about, we kind of just go through them. So the first one is asset price. Now, right here on here, it's telling us, what the range of the property is worth, based on, looks like Zillow. So now, do you trust Zillow? Maybe, maybe not. But it's giving you an idea. As you can see, the range here, 22,000 to about 44,000. And again, we're at $9,000. So even if it's on, let's just say if it was worth 23,000, that's just slightly above the minimum there. You're still, if you were to take 23,000 divided by 9, you're still what? Maybe at, just about 35%. You're still, in it for 30, roughly 35%, 35 cents on the dollar. So, that's a good place to be, because if something does go wrong, if this person, for whatever, life takes over, we have another, something like COVID or something like that happens, and they get into trouble, could you not, sell this asset once you get it back? Hopefully you don't have to go through the foreclosure. Maybe you can get it back without having to go through all that process. But could you not sell that for, let's just say, maybe $12,000, 13,000? You're still selling it below what it's worth. I'm pretty sure there's somebody out there in this particular area that wouldn't mind picking up a 2-bedroom, 1-bath house for 13 or 14,000, because then they can potentially go put a renter in there. Maybe they want it for themselves, whatever the case may be, but they would still be buying it, with equity at 13 or 14 or $15,000. So I don't think it's worth that, but we go ahead and, we want to, in this case, we would want to most likely get a BPO on this to make sure that it's higher than, 25,000 or $30,000. We want it to be more closer to the 40, because then that puts us in a better position. That puts us, around 30% or less. If it's closer to $40,000 and what it's worth. So then here too, look at what the rent is. The average rent is about between $700 and $850. So what does that tell you? Knowing that this person's payment is $187.73. Do you think that person really wants to stop making this payment to go rent in this area after making the payment for 6 years? And they have equity in the property as well. They've got $9,900 to pay it off. If they were to get into any type of trouble, don't you think that they would go ahead and sell this property? Let's say they could only sell it for $20,000. They still would make, probably between $8,000 to $10,000, after they pay all, maybe commissions and, attorney's fees and things of that nature. So there's still, there's a very good chance that this person will not pay. Even if they have to go borrow $200 a month from someone and then pay them back, they most likely will do that. So these are the things, again, we kind of just go by this step by step. We get these indicators on what's telling us that this is, potentially a decent deal. And that is a very strong point right there, because nobody wants to give up a $200 payment, less than $200, to go pay $700 in rent. Okay. So we have the asset price, which we talked about, 9,000. The property value, again, we would want to get a BPO or some type of professional opinion on what the value is, just so we know, make sure it's worth about 25, 30,000. I would say if it's worth at least 25,000, I would feel really good about it. Anything more than that, then I would feel great about it, because I'm protected. Now we have to look at the numbers. Again, how we talked about the rent compared to what they're paying. It's a no-brainer. I doubt very seriously somebody's going to give this up just to go pay rent. Okay. And the taxes on this, can't be can't be too high. So I did kind of pull up the tax record again. This is a town where they don't have a lot of up-to-date information. All we know is that the person who is on the title, which is this Colonial Impact Fund number 2 LLC, they've paid the taxes as of 2022, and now we're in 2023, but they've been paying them. They've been paid for a while. So we don't have to worry about that. Again, we talked about like your investment to value. Your investment to value is less than, around 30%, 35% as is. Could be even less than that. You could be around 25% or less, depending on the value of this particular property. These are the numbers that we look at, and we try to make that relationship in regards to the numbers and the asset itself. What is it saying to us? We saw the yield. The yield is 9%, but if you buy this for 9,000, your yield goes up because you're buying it less than the face value of it. So I don't have the calculator in front of me, but my financial calculator will tell me, what that return is. If it's already at 9 and we're buying it at a discount, then it's definitely going to be somewhere in the double digits in terms of a return. Now, who has $9,000 that is getting them a double-digit return right now? And what investment do you have that's getting you double-digit return for that amount of money? Maybe you do, maybe you don't. I don't know. But I know a lot of times for that type of money, you probably don't have it in something that's getting you a double-digit return like this, backed by a piece of real estate. So even if everything falls apart for whatever reason, they decide to go and, don't want to pay this $187 a month, and then they want to go rent, you get the property back, and then you can, then go sell it. Or you can maybe put another person there. Why not rent it? Why not put it for rent? In this case, instead of getting that $187 a month, maybe could you get $400 a month? Could you get $450, $500? That's still below the median, or that's even below the low rental value in this area. So kind of the worst thing that they could do is pay you on this. And let's just say you have this type of money in a 401k or some type of retirement account. You could move that money into a self-directed account to go invest in something like this that's going to get you a double-digit return for the next 100 and what was it? How many months? For the next 105 months. So you've got between today, which is 2023, you have like 9 more years, just under 9 more years to collect on this. So if you take, I wish I had my calculator, but I'm on live, so I can't pull up my financial calculator. You take that $136.93, that's actually your principal interest. That's the payment that you will be receiving, because you don't receive the escrow. All that goes into a separate account. So you take $136.93 and multiply it by 105. Look how much money you've made back on this initial investment. So that's what, and then this is how the numbers come together for us. And then also you could potentially look at your investment to unpaid balance. The only reason why I bring that up is because right now, let's say you do pay $9,000, you're at like 95%, 97% of the unpaid balance. So even if you were to, let's say you bought this month, we're at the end of July, you bought it in August, and then they turn around and sold the property in September. You're getting what's left. You're basically making like $900, but you got all of your money back plus $900. That basically would put you around 9-10% return if they did that. But hey, you made your money. You made 9 or 10% in 30 days. So that's not bad either. But again, I don't think that that's going to happen. They've been there 6 years. They probably, just want to stay until they pay it off. So the reason why I bring up the investment to unpaid balance, because you can pay a higher percentage of the unpaid balance if what you pay for it in terms of the investment to the value is less. You don't want to turn that down. You don't want to say, oh no, this is not a good deal, because if they were to sell it next month, I wouldn't make any money. You wouldn't want to necessarily say that on this. You'd make a little bit of money, but you don't have a problem paying a higher percentage of the unpaid balance. Your investment to the unpaid balance can be in the 90s, 95. So, I just want to point that out, because, some people that might say that might be too high or whatever, but not when your investment is only 9,000 on a 25 or $30,000 asset. Seasoning, we look at seasoning that when it comes to the numbers. So again, they've been in property 6 years. So, we just want to probably make sure that, they haven't missed any payments, or they're not late on any payments within the last 12 months or something like that. But they've been there for 6+ years now. So, and it looks like they're paying. So we would want to just, see that information. So this is a well-seasoned note. Anything over 12 months is considered good seasoning. Obviously the more months, the more years that they're in there, the better that it is. And so the next thing on here is the property title. Now, we don't have that in this case. That is something that, because this is starting to look good, it's starting to, to look like something we want to do. That would be something that we'd have to reach out to this note seller and say, hey, do you have property title? Maybe they do, maybe they don't, depending on when they purchased it. Again, when we went back to the tax report, they've had this property since 2016. So they may not have an updated property title report because they've owned it for so long, but maybe they do. Maybe they run it, yearly or every couple of years or whatever. It all depends, but that would be something that we'd have to do on the next level of due diligence. That's part of, when you decide, yeah, I want to move forward, that is an expense that you got to put towards, towards the purchase. And that can run you, about $200, something like that, $250 to get a property title. And we just want to make sure that, that there's no liens that could jump this first position that we're in. We just want to make sure and confirm that. The next thing on here is the property taxes. We show that that they're paid. They've been paid since 2016. They've been paid up, so that's not an issue at all. And the last thing would be, well, not the last thing, but the next last thing is the property or is the documentation. Again, sometimes we can go online here and we can find that stuff, but again, this antiquated website for this particular county doesn't have any of the documents uploaded. So we'd have to request the actual documentation from the note seller, and they would do that. If you're interested in it, a lot of times they'll send it to you, or they'll say, we want to, have an offer or make an offer. You make an offer on it. You have a certain amount of time. A lot of times they give you about 7 to 10 days, maybe 2 weeks to continue your due diligence or go to that next level, the second level of due diligence that you're going to do. And then they'll send over the documentation so you can review it. And we want to, make sure that what it says here, in terms of who owns it, that's on the deed. We want to check out, who it is that they have the contract for deed with, make sure that the terms are spelled out the way that things are here. We want to see what it was originally written at, how many months. We just want to make sure all of that stuff, is correct and it adds up accordingly. So you just want to double check all that stuff on that second level of due diligence. And you can ask for that too on this first level as well, if you want to, if you're thinking about, purchasing it and it looks good, you want to, see if they'll send that over to you. And a lot of times they'll send it over to you just so you can review it. And if everything is good there, great. Then, hey, okay, I want to move forward. And then that's just about making an offer, signing a contract, and then going to that second level of due diligence. The last thing that we want to consider is what are our exit strategies? We try to look at 3 to 4 different things that we can do. So in this one, because it is performing, what could happen? It could go non-performing. What is our exit strategy at that point? It would be to get the property back, or maybe it is to modify it. I don't know how much you really want to modify a $136 payment, but maybe you did. Maybe you could do a modification. Again, because you're not putting out a tremendous amount of money. Maybe you can modify it for a certain amount of time, 6 months, a year, depending on the situation with the person that's in the property. Maybe it's a temporary setback for them. We could do a modification and we could feel good about, modifying it. They've been in there 6 years. They seem to be paying on time. And we'll get proof of the payment history showing, that they've been paying. I don't know if this one didn't have it here, but we'll double check that. But they've been in there for 6 years making this payment consistently. Maybe there is something that we could do to modify it if we get into trouble. But that if worst came to worst, you could always get the property back, most likely sell it for 12, 13, 15,000. Somebody, would buy it. I'm gonna show you a picture of the property too. Where is it at? Oh, it's right here. Oh no, that's not it. I thought I think it's right here. Yeah. So this is not the actual picture now. This is what it used to look like when they bought it back in 2015. This is what it looked like. This is what it looks like currently. So obviously it looks like they bought it, fixed it up. They sold it with seller financing or contract for deed in this particular instance, and put somebody in there to recoup their initial investment. We don't know. The paperwork would tell us potentially, or the property title could tell us what it transferred for back in 2015 when they bought it. Obviously, they put some money into it. They've owned it. They've collected payments over the last 7 years. And then now they feel like they want to sell it. So this is what it looks like, right now, which is a good looking property. So if you got that back and you had to do something with it, you don't think somebody in that area would purchase that or want to rent that property in the condition that it looks? And a lot of times we could tell what the interior looks like based on the exterior. So that's a pretty good looking property there. We could also rent it out, like I said. So that's another exit strategy. If something happens, this person can't pay, we can, maybe get the property back, hopefully not going through foreclosure, maybe getting what they call a deed in lieu, getting it back from them, having them go on with their life, and then we can offer this as a rental. It would actually be better for your return if you did do it as a rental for $300, $400, $500 a month. You put somebody in there, now you're really making a substantial return at that point. Now it just goes up even more because you're getting more per month than you were originally. So a lot of things with this are looking good, especially, and this is the reason why I wanted to show this, is because you don't always have to have tremendous amounts of money. Like I said, what else can you take $9,000 and get a double-digit return on that's backed by an asset? If anybody has some suggestions, please let me know, because that would be something that everybody should look into. So, we could rent it. We could offer another contract for deed for somebody else where we would collect a significant down payment, get a monthly payment, and then they would just have to pay us off over time. So that could be another exit strategy. So that's about, that's like 3 right there. If we took it back, We could sell it quickly for about $12,000, $15,000 most likely. We made all our money back plus a profit. So we're happy. We can go on to the next deal. The person that's getting it is still getting it at a discount. Um, and they feel good about it. We could get the person out. We could do it as a rental if you wanted to do that. That's not something that I necessarily would suggest, but you could do that. Or you could do another contract for D. So you have three different exit strategies there, all of which is going to recoup your investment plus make you money. Some will make you more money than others, but in any instance, you wouldn't lose. So I would say all in all, based on initial, first level of due diligence, this is something that if I had this amount of money, I would be, interested in probably moving forward on it. So that's what we wanted to do. That's what we wanted to accomplish tonight, is to bring you a real deal, something that's, out there that, can be purchased. And again, to show you that you don't need, hundreds of thousands of dollars. You can do this with less amount of money, and it's great for a retirement account. Who wouldn't want to collect over the next 9 years, 10, 10, 11% in their retirement account? I don't know what the retirement account is doing right now, but at least this is backed by an actual asset. So that's what we wanted to do. We kind of went through each of the steps, everything. We couldn't see all of the information, but we saw enough that we could make a decision based on this. So that's what we're going to be doing that night. Going over real deals that are out there, answering questions. People have questions about real estate notes and real estate note investing. You can find us here at about 8 p.m. Each night. Also 12:30 in the afternoon, 12:30 Eastern Standard Time. We take questions as well. We talk about topics in real estate and answer questions about real estate investing and real estate notes at 12:30 Eastern. We're on for about 30 minutes as well. And then we'll come back at the nighttime and review real deals and answer any questions. So with that, that's it for today. And we'll see you again tomorrow. Have a good one. Like the little niggas, like he a hitter. Goof ass.